Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Friday, snowy Michigan edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, Dennis Dick. On today's show, oh boy, UPS and FedEx are getting cracked on some Amazon news again. We've got earnings. We've got the sell-off yesterday will probably lead the show. We're going to talk biotech with our guest, Joel McCann, will join us at 8:35. He's the CEO of Slingshot Insights. But a lot of stuff to get to today. So Joel, give us a breakdown of how we're doing this morning in the S&Ps, gold, and oil.
All right. Well, the SPUs on the screen are trading down 7, but since we had such a big rally from 4 to 415, according to fair value, we're actually trading up about 9 points. We'll talk about that with Dennis when he comes on in a few minutes. Bitcoin, this is the Bitcoin SIBO futures, just hanging out in the 8,000 handle. 8,500 has just been an area of resistance. Can't seem to clear it. Crude in danger of going under $60, down 96 cents at 60.20. Gold in the red by 20 cents at 13.1880. Silver in the red as well. Dennis, here we are ending the week here. Are you getting your shopping list out today for the portfolio at all?
Yeah, I have, and I started nibbling yesterday, and like I've talked on the show before, I've been underweight this market for a long time. The wrong side, I've been underweight for a couple of years here now, so obviously I was way too early getting underweight, but I'm starting to get a little bit reallocated here. It's been a nice sell-off. I'm definitely picking, more conservative value names. Yesterday, I bought some ExxonMobil at the close. I just like the 76 level. It's come down a long ways. I know it's breaching it here in the pre-market, but it's actually not breaching it because it's ex-dividend today for 77 cents. So I actually got paid the dividend too. 76.07 was the close. I think that's right where I bought it. It was almost on the closing price. So that's when I nibbled yesterday. It's the only thing I bought yesterday, but I started getting a shopping list together. And Kramer's talked about the same thing on Mad Money. If you've got stocks that you've wanted, now is a time where you might be able to get them, maybe at a discount to where you were thinking you were going to be able to get them. So a couple stocks on my list. If you're looking at tech stocks, one stock on my list, Hewlett Packard. I've talked about this on the show for a while, HPQ. This is the 3D. It's going to be 3D printing, obviously. They're into that. They're going to continue to expand there. And I do believe that they're going to be the player in the industry eventually. I don't think 3D printing is going away. I think there's a lot of uses for it. Just like my buddy over at Barron's Jewelers, he's got two major 3D printing systems there for the molds for his rings. He's currently using one made by 3D and also one made by Stratasys. But I think eventually HPQ is going to be your big player in this industry. So if I'm looking at that, look at the stock of HPQ, $24 back on January 29th. Here we are 2 weeks later, it's under $20 at $19.92 the close. Maybe a shot today, maybe, if we get another big market whoosh, maybe get it even cheaper than this. But it's starting to get to a point where, yes, you're picking a bottom. Yes, I wouldn't put this on for a trade right now because that's the definition of, trying to call the bottom. But if you're looking at it as a pure investment with a timeline of 10 to 20 years, or 5 to 10 years even, HPQ 2.76% dividend, I think they're going to be a player in the industry, and that's why I like it.
Okay. All right. For me,
what do you got? What's your shopping list entail?
I want to buy some more Twitter. I do. I just gotta figure out. I gotta forget worrying about the gaps. I gotta just figure out a price. Why? Because I think that quarter was like their watershed moment. And remember, this is going way back. Remember when they killed Facebook off the IPO, and then it came back, and then it had a good quarter, and then they jammed it back down. I just think that with Facebook doing what they're doing from the advertising dollars are going to go somewhere. And I just think that's where we're going to go to. I mean, that's one good quarter, one bang up quarter. You know, you're going to see
Good
some
numbers.
other ones. Yeah.
I mean, as a trade, I like Twitter. As a trade, I know there is a gap to fill there, but as a trade, I do think you're buying one of the strong stocks. Now, I always mix up as an investment. The reason this has never been in my investment portfolio has always been valuation. And obviously, Twitter had a great quarter and they're blowing it away, but still, they don't make a hell of a lot of money. And that's just my different style. I never stick kind of companies usually like this when the multiples are this high until they actually start making money. The odd time you put something speculative in, but this isn't really speculative. It's just a matter of I don't like the valuation on it. I'd much rather go, with a Facebook with a certain multiple than a Twitter if I was sticking something in my investment portfolio. But there's the wild card. There's been rumors before that it could get bought out. So I'm not going to totally talk against you there on this one. I like it as a trade though. So I would be on the same side with you. I just have a shorter time frame, I think, if I was buying Twitter.
And then also I talked earlier in the week, GM, not a sexy stock. They're making money. They have a good quarter. Another stock that didn't, have the great run.
No.
I mean, it had a decent run. Something with a little bit of a dividend here. Even though I've been trading AT&T from the short side here, it's having its pullback. I think there's areas, because that's what I look for: 4, 5, 6, 6% yield. Things like that. Like a Boeing, I can't touch. May redeploy some IBM. Now, I've missed a couple runs on that, but that chart just looks ugly, and that's what you want to do. It
does. But you know what? I think IBM is going to be a major blockchain player, and I'm already in IBM. I've obviously bought at 152, and then it's went to 170, and obviously I wish I would have sold it, but hindsight's 2020. Everybody would have wished they liquidated their portfolio 3 weeks ago and been rebuying it all. But coming into major support in the 145 area, I like that IBM. I would be another one. I'm already in it, so I'm probably not going to add to it, but I like it. 4% dividend here too. Also Intel, if you're talking tech stocks, INTC had a great quarter, stock breaking out over $50. It's all the way back down to 42 here this morning, back at support. So if you're looking to stick stocks in your long-term investment portfolio, we just gave you, I think, 5 right there, at least in the tech sector. And then, obviously you're looking at AT&T too, and I can't argue with AT&T. I mean, it's got a 5.6% dividend there.
Yep.
It's a nice dividend. It's a cash cow play for you. It's not going to make you a lot. I don't think it's going to lose you a lot either. It's kind of like a bond. The only one thing, and the reason that I do have a small position in AT&T in my investment portfolio, but the reason it's not bigger is just because I think phones and there's so much competition there now, and I just wonder, if pricing, your monthly plan doesn't come down, because right now I'm currently paying like $200 a month for my 2 phones and all the data that I'm currently using. I do think that's going to come down as competition grows more intense. I mean, competition is already intense, but they find ways to bring it down. There's people using, different plans now. So I do think, the pressure is on there. Like, imagine this, just throwing it out there, and it's going to be your segue into UPS and FedEx. But imagine Amazon coming out, and starting to do sell plans or something like that. Imagine, they've got the power, and they've never been concerned that much about making money. They could really shake up that industry too. Now, they sell stuff, but why can't they sell, cellular plans as well? So there you go, Amazon. There's another area that you could take and put some hurt to. But, speaking of that, we do have news from Amazon here this morning.
Yeah.
And they are shaking up UPS and FedEx. Spencer, what is the details here?
Oh, yeah. UPS FedEx are getting cracked this morning. This is a report from Dow Jones, came out at about 6:30 a.m. That Amazon is launching a shipping with Amazon that will launch in the U.S. This year, is what Dow Jones is reporting. It hasn't been confirmed by anybody. It's Dow Jones, so it's pretty reliable. But FedEx and UPS getting cracked on this news.
FedEx and UPS down significantly. FedEx is down $11 here right now. This is the reason that I sold FedEx when it was going up. And I bought FedEx, my investment portfolio, at $90, and it went to $190 about a year and a half later. I'm like, you know what? There's been rumors multiple times that Amazon's coming for them, and I just wanted out of it. I obviously sold way too early. This was in early 2017. Hit the brick wall at 200, broke out. Obviously went all the way up to $274. Now it's coming off to 227. UPS is one that I've always had my eye on and just never really got into it. I do like UPS coming in here now. I mean, UPS, if I was going to buy one this morning and just on this Amazon stuff, I think it'd be UPS. I like the dividend 3.5%, and you're coming into major support, big psychological $100 level here. So you know what? I'm throwing UPS on my watch for my portfolio here. And maybe not, and maybe for a trade too off that 100 if it can bounce off there. But I just think there's a lot more support down here for UPS. It's a more conservative stock, and this is a huge sell-off. I mean, 135. We were 135 on UPS just a month ago. Now we're talking about it at $100. You get a 30% off here, 3.5% dividend. And yes, Amazon, but we kind of knew Amazon was coming. I mean, this has been talked about forever.
Yeah, and also, you just got to review, Best Buy, right? Best Buy was going to go out of business.
For sure.
We had a dead meat at $12. Also, we had look at the way Kroger and some of these retailers got hit.
They
Walmart,
do come back.
they do come back. So the thing here, what I would like to know is what percentage of the business, do these companies, what's their exposure to Amazon? I mean, they're still going to be shipping a lot of packages, but, is it 5%? Is it 10%? Is it 20%? That's what you have to look at. Also, when are they actually going to deploy this? When is this actually going to happen? These stocks, big all sell-offs. I'll just give you some parameters to look at here early. Pre-market low and UPS. That comes down at 101 even. We haven't been under $100 here. Last time we were under $100, it's been a long time. Oh boy, going back, I can't even find when we've been under 100.
Long time. This is really
UPS?
it's
In UPS, we're talking about?
May of 2016 was a 100.05 print. And then I'll give you the levels. I just want to tell you, if you're trading this short term and you're trying to stay shorted on the 15-minute chart, 104. Look out under 104. You could have some short covering. FDX. That's two different occasions here. It made a low at 224.62. Now it's up $5 from that. So that looks like it's turned the corner. And 224. I mean, if you could see this at under 220, I don't know if you're going to see it today. Your low in November was 218.77. So there's some levels, but looks like they're starting to recover already.
Yeah, impressive move down here, though, on the whoosh. And obviously, you've already got this coming at bad time, too, because stocks are already out of favor altogether. Now you get some bad news. They're like, no, I want out now. So you get more of a whoosh. Like I said, UPS under $100. I kind of like it long term. I think I might actually buy some if it gets down that $100 level for my investment portfolio. So what's your shopping list, Spencer? Joel gave you his, I gave you mine. What do you got on your shopping list? More GE?
No, not more GE. I have enough GE.
No, Spencer dug his toe in or dipped his toe in the water and bought some GE the other day.
I did a little bit. No, I mean, I'm a natural contrarian.
Join my pain. At least I can complain with somebody else now.
No, I mean, I saw that the way I look at it is there's two, not just GE, but looking at this sell-off, there's two ways I'm looking at deploying capital right now. One, I'm a natural contrarian, just by nature with stocks and with anything. So I'm looking at taking some contrarian speculative plays. On the one hand, that's what my GE is. It's a speculative play. Nothing I wouldn't cry about losing. And then I'm looking to get into. I haven't really gotten into China, and I've been talking about it for a year or two and thinking about it, but I haven't really gotten into it. I'm looking at some broad-based China ETFs, KWEB, CQQQ, those kinds of things, and so that's on my shopping list is those broad-based China ETFs and some speculative plays. GE, Under Armour's in that group, speculative, but that's my list.
You know what? One other thing I did, and actually I did it last week, and I'm not sure if the timing was good or bad. I did take off some exposure to the U.S. market, just some investments that have performed really well. And I did the Mark Yusko kind of thing. Looking for, markets, overseas markets to perform a little bit better than our markets. So, I got out of some of my stuff and reallocated it. So I'm looking elsewhere, other economies. I mean, obviously this year is going to be a tough year. If people are thinking that, we're going to go up and have a 10 or 15% year, this is a serious correction. We are now almost 300 handles from the high. The rally next time there's going to be offers up there.
Yeah.
It's not going to be
backing and filling on the upside too.
Yep. And I guess I want to be backing and filling, Dennis. What would that be?
I don't know.
Upping and filling? I don't know.
Yeah, because when you're backing up, it's going down. I don't know, but it's kind of like, but it's the same principle. I mean, the book is going to fill up with people who are underwater. Everybody who's been buying the dip and been rewarded for it for the last 5 years are now selling the rip. And yesterday on the show, I got some egg on my face because I was saying, you know, the way it was coming back, the way the market had come back yesterday morning, I was like, I feel like the worst is behind us. I even said, I don't think, you know, I think the VIX is going to start to leak. And I was dead wrong. I mean, we came in and the sellers came in, and that just is like a punch in the face because I'm like, okay, well, I thought it was actually maybe safe to dip your toe. And long term, I still think it is. But short term, I thought, you know, maybe it's safe on some trades, and it's not. And when they come in and hit that rally yesterday, you know, we were up 300 points at one time, and they hit us down 1,000. That's just telling me, and it's reconfirming that, hey, there's a lot of people who are in a world of pain here right now. They are getting out of stocks, and that trade could last for a while because it was 5 years. Going straight up for basically 5 years since really the crisis we had over in the European. I know we've had a couple little problems since then, like the Ebola issue, the oil scare when oil went down to $25, but really we've been in a relentless bull market really since the financial crisis. So you could go all the way back to 2009 when the S&Ps were down at 666. So if you look at the long-term chart of the S&P, or bring up a SPY, whatever you want to do, and look at the monthlies, I mean, really, there is a hell of a lot of air below. From 2011, we're $100 on SPY, 257. So in 7 years, we basically went up 150%. It's pretty good 7 years. So if you know, even going down another 20% from here, the stocks still look like they're kind of in an uptrend. So even coming down, you know, to the I don't know where the 200 or 200-day moving averages. If we're getting close to that, I don't follow any moving averages. I've never been a big fan of them, but I know a couple of people on my Twitter account were just tweeting at me saying some stocks are obviously getting close to that. And sometimes those are bounce levels. I've never been a big fan because I've never found a lot of luck trading with those. But what are your thoughts on the 200-day? You looking at that stuff, Joel? Are we getting anywhere near?
I'm not such a moving average kind of guy. No.
The lagging indicators, what I would say.
Yeah, I more like to pick a level, an area of you know, if you see a stock pull back, you know, in the you want to see a couple things. You want to see 1 or 2, 3 lows in the same area. You want to see if it's a former area of resistance, you know, and you also just want to check the mood of the market as well. But we're getting backed up here with stocks in the chat and irrelevant stocks too. But Dennis, I just want to take a guess at a position that you took home long last night. And I don't know if I'm going to be right or wrong.
Yes.
I think you went home long a little Twitter.
You know what? I was going to go home long Twitter, and I actually had it at the close of 3018. And for whatever reason, it got upgraded by RBC last night too. And that was actually helping it for a little bit. But then it was twice, 2 sellers that came in and whooshed it down. And if you look at after hours, you can see it. It whooshed down like 29.60. And then it came all the way back up. Market rally came all the way back up to like 30.20 or something like that. And I was like, you know what? I just saw this thing fall 60 cents on me after hours. Came back up, and I'm like, I'm getting out. So I guess loss aversion there for me on my Twitter day trade. So I ended up selling it, even though I knew it was upgraded. And then it whooshed down again right before the close. It whooshed down like 29.70. So somebody wanted out last night, and that's why I backed off on my overnight day trade on Twitter. Wish I would have held it because it's obviously trading up 1% here in the pre-market.
Okay. All right. So there's a lot of stocks here.
Yeah, talk chat stock. Let's go.
Let's go with a stock that I used to pronounce the wrong way, but I've changed my ways. Nvidia. Let's talk about that. Good report.
Yep. Nvidia earnings yesterday after the bell, adjusted EPS $1.72 versus $1.16. Sales of 2.9 versus $2.68 billion. Q1 sales guidance coming in higher than the estimate, $2.9 billion versus a $2.47 billion estimate. That number, what else did they say? On the conference call, the CFO said with regards to crypto, the overall contribution from crypto is difficult to quantify. The segment was a higher percentage of sales this quarter versus the same quarter last year, but other than that, it's kind of hard to quantify the impact of crypto on NVIDIA. But good numbers.
Huge pop. And I will go out and say, and I tweeted this yesterday, and I was like, they're reporting on the wrong day. I'm going to stick to that because that report was unbelievable. They blew every number away, every metric away, really. And honestly, I think if they would have reported that like a couple of weeks ago, I think it could have been up $50. But because you're reporting in this terrible tape, it struggled. It struggled even off the hop to even rally. It was then at 225. And then eventually they're like, this is just a really good quarter. And they bought it all the way up. $238. Now, that being said, we're still in such a terrible tape. So can you come in here and buy Nvidia? It was great quarter, great numbers, blowing it all away. Can you come in here and buy it when it's getting near an all-time high? I can't do it because we're just in such a terrible tape. So great stock, great company, terrible tape. That's why I'm almost a fader of the rally, just because of the overall macro picture here right now. People are willing to sell stocks. When the real money comes in here at 9:30, I don't wonder if they don't start, if this thing gets anywhere near the 250 level. What's the all-time high? Give it to me, Joel. 249?
249.27.
So EA, we're up near the mid 245s. I think there's a lot of people that just want to lighten up. And people, and you know what, Tim Seymour actually made a great point. I like Tim. We've had him on our show before too. And the fast money guys, they got some good points a lot of times. He was saying, when you look at it from a portfolio perspective, when stocks start going, rough, when it starts to get rough and, people are looking to raise cash, what do they sell first? Not the right way to do it, but what do they sell first?
They're winners. They
sell their winners. And Nvidia is a winner for everybody. And you know what? Portfolio managers are guilty of the same thing. They're looking, I'm down in this. This one's going to come back, but I'm going to lighten up the Nvidia because I'm way up and it's near all-time highs. Can't help it. It's a great stock. It's almost a victim of its own. It's going to be a victim potentially of its own success in that case. But people do. They sell their winners. And if they're looking to raise cash and if they're concerned about the markets, it's stocks like this they're going to sell. It's why Twitter gets up to $35 yesterday on a great report and gives back $5 of it all the way down to 30. So, you've already got precedence here. A Forex company reporting a great report and getting a good pop. Now, Snap, the same thing. SNAP, it took 2 days, but Snap, started giving it back now too a little bit. So maybe you'll let the dust settle. But I think if Nvidia gets anywhere near those all-time highs, I think there's going to be people who are willing to take chips off the table.
There's a lot here and a lot of things that you have to keep in mind here. Number one, some people, when they saw this hit 204 on Tuesday, they're like, holy cannoli, what happened here? And now, 2 days later, you're back up in, near all-time highs. Now, we are trading at 30. I would just take 239 even. That's not quite the high of the pre-market session. It got to 42.63. But Spencer will pull up the daily here. And you have a high, and this is a number below, but I'm giving you where I see is resistance, even though it's below it, 237.97. That was your high on February 2nd. So that's a relevant number to me. Also, if you start to climb into that 240 handle ahead of the all-time high, you got an all-time closing high of 245.80, the all-time high 249.27. So there's some parameters here. If you go back under 238, you could have some sellers in this, but nice move. Is this moving AMD at all?
A little bit. And AMD was getting more of a pop last night, but then started to leak a bit as well. Full disclosure, I still have some of my AMD. I sold half of it before the report, which I would have sold the whole thing. So I sold it up at 13.5. It's now 11.5. $11.45, up 2%. So it's getting a little bit of a lift. Intel as well, getting a little bit of a lift. It's up 1% here. So some of your chip stocks are helped a bit here by Nvidia. But that being said, this is Nvidia's quarter. This is Nvidia's numbers. And you know what? I used to pair trade Nvidia AMD a lot. There is definitely still a relationship, but right now, everything is just kind of moving together to a certain extent.
You know what?
Stocks start rising, they all go up. Stocks start selling, they all go down.
No, Dennis, and that's just one thing I want to allude to here. We had someone in the chat, the Seer, put a long post in here. I don't know if you got a chance to read it, but just talking about different strategies at different times. And I think that's one thing that's really been, your key to success is you keep doing something consistently, but once the dynamics of the market change, you got to adjust your strategy. And I think that's always been your strong suit. Like that, you probably made a lot of money trading that ARB, that spread, but it just disconnects. So what do? You move away from it and you start trading something else.
Yeah.
So yeah, this is
everything is related. And my entire, trading career, my 18-year while I've been profitable, and this is talking more day trading stuff, is all based on relationships. I don't, make calls really, sometimes you do, but for the most part, 90% of my money is based on relationships. And, I look at, okay, this stock is related to this stock. So what's that going to do? I like my pairs trading. And, that's your classic relationship trading. But also right now in this type of market, everything just moves together. So you got to be able to say, okay, well, everything is related right now. What does McDonald's have to do with Southern, your utility stock and a food stock? Or what's a tech stock have to do with a utility stock? But if you looked yesterday, everything was down. Utility stocks were down, everything was down. So, you got to consider the betas to a certain extent too. But in this market, typically I've always said, when I see the TLT trading down, that's bad for utilities, good for financials. Right now, though, everything is just kind of moving together. Everybody's got their eyes on the S&P futures, and the futures start tanking. They sell stocks all together. And if they're looking to raise money, they sell them across the board. So you've just got to be able to back away from your traditional relationship sometimes and say, okay, well, now everything is related. So, just because financials are ripping it doesn't mean that, utilities are going to go down, or just because utilities are trading up doesn't mean financials are going to go down. So you've got to be able to back away from your traditional relationships in these types of markets and say, hey, just stocks are all moving together right now. So it's right back to relationships again. And this week, just, to tell you my trading week, a lot of people say, oh, I've had multiple texts. How you doing? Everybody's worried about you. It's my best trading week in 5 years. Best trading week for me in 5 years.
Sure.
And you want to know why? Because I do a lot of the same strategies on a smaller scale that like a Virtue Financial is going to do, like a high frequency trading firm. I'm doing statistical arbitrage. They're doing straight up arbitrage. They're doing stat arb over there too. Check out the chart of VIRT. You're going to be like, what happened here? Look at this. VIRT. This is your high frequency trading firm. Why do you think that chart's exploded? Because the VIX has exploded and volatility has exploded. And everybody knows that Virtue Financial is kicking butt in this market. Because when relationships are out to lunch, I can guarantee you that Virtue Financial probably had their best week in 5 years as well. They're just on a lot bigger scale than I am. They're trading every single thing in the whole entire world. Great company, obviously, from a trading perspective, and they're being rewarded. And when the VIX goes up, the stock explodes. VIR, you were talking.
Yeah, VIR. I don't know if they have the earnings out yet, Dennis. But tell me if you would. There's a stock we could talk about now, and we could give a couple lessons on this one. Are you putting PCG on your shopping list yet?
It's been on my shopping list, but since they slashed and they got rid of the dividend altogether, I can't do it. I think it was RBC made a case that this could go to $10. And when they said that, it was originally on my shopping list. When this went from 70, and this is a utility stock, conservative stock, it had a nice dividend. But obviously, this is, concerns with the California wildfires. And if you look at the monthly chart, they 70, man, we are back down to levels we haven't seen since 11, 12, 13, 14. But this company suspended not only their dividend on the common, they suspended all of their dividends on their preferreds as well. And when they're doing that, it's telling me that they think they're liable too. And we don't know what that liability is. RBC was saying they could be liable for so much money that they could end up sending the shares down to $10. That's enough to scare me away completely on something like this. This is now a wild card, and it's too wild for me. So those wildfires made this one too much of a wild card. I would rather pick on another utility stock that didn't have that unknown exposure here right now. We don't know how this is going to resolve itself. And if they're found liable for a lot of this damage, this company could be in a lot of trouble. And when they're suspending their dividends, it's telling me they think that they've got some liability on their hands.
Yeah, they're due to report this morning, estimated 70 cents. So I don't think it's going to be so much what they say in the, at the actual numbers in the report. But, if they say anything really, if they come out and say something positive, if you're trading this from the short side or you're looking to buy, I'd put a buy stop in somewhere. Because I would rather, if it does come up with some good news, I'd rather catch it going up, because right now trying to catch it going down hasn't been very fruitful. But we'll just keep an eye on that one. Back to the earnings parade here. Another Sean Udall pick that's doing well today, FireEye. Spencer, how was the report?
Yeah, I think FireEye is finally profitable. I know they had issues with that for a while, but I'll read you the numbers there. Q1, Q4 EPS. Yep, 1 cent versus a 1 cent loss estimate. There you go. 2 cent beat. Sales of 202.3 million versus $193 million estimate. So they beat both those numbers for Q4. Q1 sales guidance coming in higher, 192 to 197 million. 186 was the estimate. EPS coming in higher, actually in line. Fiscal year 18 guidance also coming in higher. So good report all around from FireEye.
Big numbers, and the stock obviously getting a huge lift here. I believe there's an upgrade as well. Somebody's mentioned in the chat this morning, but it's the numbers driving it. It's up 13% here in the pre-market. The only thing, and I think you might point this out too, is you have that pesky high at $15.98 back in January 16th. I know we're above that here right now, but again, poor FireEye, you're reporting kind of on the wrong day. I mean, it's getting a huge lift. It's nice and everything. It's just a matter of if this market decides to turn around and tank again, they take everything with it. And that's why I can't come in here and buy FireEye up $1.89 here this morning thinking it's going to go higher. It might, and if the market holds up, it very well could. But keep an eye on those SPUs because they start rolling over and they'll start whooshing everything else down too. It's a stock. Unfortunately, it's a stock.
Wow, exactly. I mean, I've had to, like, if someone, I was walking down the street and someone said to me, I own FireEye, what do you think about FireEye? I would say, man, the day that it holds $16 is going to be the day that I'm going to get really interested in it. Because if you go longer term on the dailies, I mean, 16 was at the beginning of the year. Actually, the high for the year is 1598. It's in a gap area. 16 was an area of contention back in the middle of last year. I mean, it's just been the area. So if it can establish this, I mean, now it's, already probably trading double its average daily range. I mean, holding 16, yeah, but man, if you had this thing, let's say you picked it up on Tuesday at 1360, here you are back at $16. But that's what you need longer term here. I like to see, not only the open, but how this one closes today.
Jump over here just back to the earnings parade, and there's a couple other ones from last night that were interesting. One that is getting absolutely murdered is Expedia. It's back over $100 here this morning, maybe the little market rally helping it a bit, but we are down 20 points here on EXPE. Spencer, what did this company say?
Q4 adjusted EPS 84 cents versus a $1.15 estimate. Big miss. Sales 2.319 billion versus 2.36 billion. Another miss there. Catching downgrades this morning from Benchmark. Actually, Citigroup and KeyBank are maintaining their ratings but lowering their price targets.
Wow. So we're down $20, down 16%. I mean, TripAdvisor has been the exact opposite, at least, but maybe TripAdvisor got its beats back in 2014. It's actually performed quite well here in the last little bit. And then it's also bringing Priceline down as well. PCLN is trading down $50 right now, and that's just off the Expedia report here. PCLN obviously got killed yesterday as well, losing $80. So there's another $50 because of the disappointing Expedia numbers. I don't know what to say here. I mean, this is kind of a disaster, and I when stocks fall out of favor, they stay out of favor for a while, and now this one's completely out of favor.
You got a buyer in here, though, Dennis, in the after hours and the early morning market. Someone was really stepping up here in the 99 handle. Your pre-market low is, I believe, 99.05. And it's just real consistent. Bring up that 15-minute chart, Spencer. And you can see here, starting at 17:15, persisting until that 8 o'clock close. And then that same buyer got up at 4 this morning with Dennis. And it's just been buying in that area. Not a lot of trades, but to me, that signifies someone trying to big stock in under 100. Check out that pre-market low. I'm sure you're going to get some kind of bounce on this. If that 100 goes, wow, I have to look at the dailies here. Oh, man, going back a long time. You did have a low at 96.58 in June of 2016.
Multiple questions again from the chat. Chat's running. Let's go to the AIG report because DC wants to know about what our thoughts are on it. They did report earnings there last night. They did kill the stock on the initial report, but it came back. AIG report, Spencer.
I'll read you the numbers real fast, and then we'll do it quickly, and then we'll go to our guest at 8:35.
Oh, yeah, sure.
So AIG Q4 adjusted EPS 57 cents versus a 75-cent estimate.
Big miss.
Big miss. That's the big number for me. UPS.
There's a big miss. The stock trade down to 55.5 after hours. I was looking at it, I was like, wow. And I wanted to lift the 55.5. It wasn't a ton, but it was offered there. I'm like, really? I mean, yeah, it's a miss, but this is AIG down another $3. I wanted to buy it. Couldn't pull the trigger. And then literally 10 minutes later, it was back to flat. I was like, I just got to do it. Anyways, 58.28, and now it's 59.51. So crappy report, but you know what? It's a stock that's been beat up already. I own this in my investment portfolio. I think there's some value, and that's why I'm sticking with AIG.
Okay, pre-market low, it's 54.56. So I know Dennis is really kicking himself. Just look I want to see the stay green on the day. You close at 58.28. So we are trading up substantially. If you want to look for resistance, you don't have to go any farther than yesterday's high at 60.62. Your 2-day high at 61.30. John Dotson's being patient. We will talk Qualcomm after the break. Spencer, what do you got?
We'll be right back with Joe McCann. He's the CEO of Slingshot Insights, the great research source for biotech news and interviews. We'll be right back with Joe in a moment. Welcome back, everyone. This is PreMarket Prep. I'm Spencer Israel, with Joel Elconin and Dennis Dick, and we are now joined by Joe McCann. He's the CEO of Slingshot Insights, a biotech, I guess you can call it news, research, insights, interviews, resource. Joe, how's it going today?
It's going great. Good morning, guys. Good to be on.
So give us it's been a while, Joe, since we've had you on this show, but I want to say middle earlier last year. So give us your overall views of where we're at right now in this biotech market.
Yeah, good to be on again. Thanks for mentioning Slingshot. So, things have been pretty up and down, obviously, across sectors in the last couple of weeks. I mean, I think that the volatility has been, for once, not more severe in biotech. I think a lot of times when there's any volatility, just because of the nature of the beta of the names, a lot of times healthcare gets hit the hardest. I think there's a lot of things going on that kind of are putting in something of at least a mental put option on the market, a floor, because there's a lot of sector positivity and trends that are helping names that have nothing to do really with the broader markets. I think the biggest thing is that pharmaceutical companies, large scale, are some of the largest recipients of the benefits from the tax overhaul. And so you see a lot of money overseas for years. I mean, this is a decade that people are talking about how much money could come back for Pfizer and for some of these other big names. So I think overall, when you're looking at these smaller companies, that there's a very active M&A market, and so any move in the fundamentals are driven by short-term market changes are still going to have that in the back of investors' minds.
Joe, what about the 21-year high in new drug approvals by the FDA last year? Does that tell you that we're in sort of a new trend now, where drug approvals are going to continue to increase in terms of quantity, or do you see that maybe retracting a little bit this year? Or how do you see that shaking out?
Yeah, I think it's an interesting concept. I think there's two things at play. I think one of them, and the most important, really, is the mindset of the FDA. And we've been laughing a little bit among people that I've been talking to on the buy side, thinking, in this market, maybe even that drug can get approved. And I guess what we mean by that is that some of the scrutiny and the high burden where the FDA seemed to be playing a gatekeeper, saying basically, if it's even questionable, we're going to really put the onus on the drug to prove it deserves to be on the market. And I think the mindset of this FDA is a little bit more, and it can be marginal, but that's still going to have a big impact. It's a little bit more, hey, if it's safe, we trust doctors and patients to decide if they should use it, and so let's approve it. So I don't have particularly concrete examples. I mean, I think some of the drugs, or even from the last administration, but they're erring more on the side of approval, I would say, than not. And that's been translated into the number of, just on a sheer volume basis of approval. But I think the other thing that you have in the background, and to not sell the drug industry short and the science community short, is, a better understanding of, what the pathway to getting approval is, the human body in general. And so you're seeing a lot of, cutting edge science and breakthroughs translating into successes on the drug approval front too. And I think the last thing is just the amount of private money and public money that's focused on healthcare now in biotech in particular, from the venture capital side, as well as the public market side, that just results in more companies starting and more efforts. And so when you have all three of those things going together, you're going to see a lot of new approvals, and that's going to translate into revenue and profits for the sector.
All right, let's talk a little bit about Amazon. We're seeing sort of the Amazon effect this morning with the UPS and FedEx. So of course, we had that news from 2 or 3 weeks ago now, that Amazon and Berkshire and JP Morgan are going to team up and create the greatest healthcare company ever. But how do you see, there's all these headlines every few months. We get like a new Amazon healthcare headline, like, they're not going to ship drugs in these 3 states or whatever. And every 3 months it's something new, but nothing concrete at the moment. So realistically, like, what is your time horizon for when you honestly think Amazon could start to have a tangible impact on the healthcare biotech space?
Yeah, I mean, I think the Amazon thing is really interesting in the way that, them getting in and disrupting retail was. It's a long-term play. They're not going to be doing this overnight. So it's hard to put an exact number on when. I think we're looking at more than 1 year or 2 years. But I think what you'll see in terms of trying to invest in the healthcare space is, hypersensitivity among investors in the distribution and the connection space. And what I mean by that is, the companies that are putting patients and providers of healthcare services together, that's probably where Amazon's going to start. And we can talk a little bit about that. But, if you're somebody who gets pills from a drug manufacturer to a patient, and there's a convoluted payment scheme that you're profiting of, those types of names are areas that Amazon's going to go after first. So they don't need to actually, show disruption, I don't think, in order to hurt those names. I think just indications on what they're thinking about is going to do that. If you look at the day they announced, some names are down double digits just on the announcement, like some of the largest names in the space. So the CVSs of the world, some of the pharmacy benefit manufacturers, like Express Scripts, were down. And so I think what you're seeing is an awareness now by investors of how disruptive Amazon can be, how much time they can spend on it, and similar to the way that grocery chains or some other sectors have gotten hit when Amazon's focus got put on them. I think we'll see that happen again in healthcare now, kind of for the first time.
Question here, Joe, from our chat. Do you have particular favorites right now in the biotech space?
Yeah, I think for biotech, for me, I'm looking at kind of some of these mid-cap names that have differentiated platforms. We've seen really big M&A takeout prices on CAR-T names that everyone's been focused on, like Juno and Kite. Both of those names are going to be long-term value providers for the companies that bought them. And it's not just going to be the 1 or 2 indications that are initially getting approved, but rather they're going to be many years. So I think that's kind of a thing. And if you look at Sanofi, what they're doing, they just built bought themselves a blood treatment company, a hematology company overnight between Biogen and this other company, AVLX. And so I think what we're looking at are large cap players with a lot of capital, just ready to go and finally pull the strings on, or pull the trigger on it. Novo Nordisk, a large diabetes company, lost out on a number of deals recently. Biogen hasn't done the deal yet. So we know that those companies are looking to do something. And so if you can find a name out there that kind of is being overlooked, or is maybe looks a little bit expensive but has a long-term potential, I would think that they're really attractive. I mean, one name that comes to mind is the ticker ADMS. They have a Parkinson's drug that is approved. It's an older therapy with a better profile, but it's on the market. Physician feedback has been really positive, and it's something that a company could slot into an existing franchise really easily and show near-term revenue growth and profitability.
So, Joe, if I could switch gears a little bit and talk a little bit about your company, Slingshot Insights, and you can correct me if I'm wrong, but what you guys do is you set up expert phone calls, conference calls with doctors, I'm assuming professors, academics, other people who presumably are know what they're talking about with regard to specific drugs and specific medical issues, and you do that ahead of major catalyst events, quarterly earnings reports, PDUFA dates, things of that nature. Any calls, expert calls you have lined up at the moment for the next few weeks or few months?
Yeah. So, I mean, today we're actually going to be doing a number of calls, and they're ranging on everything. I mean, so recently we've been doing calls around, big catalysts that are coming up. So one of the biotech Twitter names that people really have been focused on is this company that has a peanut allergy product, and so it's a treatment for peanut allergies.
I'm interested.
They're supposed to have data this month. AIMT.
That affects me. I'm interested.
Sorry, what's that?
I said that affects me. I'm interested.
Oh, there you go. And so they have basically a peanut protein pill that you take, and over time you can build up an immunity to the peanut allergy. And so we've done a number of calls with experts around how it's going to actually be used by patients, whether there's an appetite, if it's not a cure for a treatment, if it just makes it a little bit less risky for you. So what customers do on our side is they say, hey, we're interested in this data that's going to be coming out. It's going to be a really big, important thing for the company. Can I speak to a couple, pediatric allergists to understand, multiple things? First, what's a good press release look like? What actually is going to be something that doctors get excited about? Secondly, how many of your patients actually want to go and do this sort of thing, even if there is some, stomach issues, or, maybe some risk of your kid having a reaction or a rash from it. And so, we have these 30 to 40-minute interviews where our clients or anybody, who's on the call can start to really get firm answers from people who are going to be using these products. And we repeat that across a lot of different sectors, but, something like AIMT is up against a company that has a patch. They have a pill. The other company has a patch. How are these going to be played out? There's a lot of different ways to think about it. And so these calls have been, a great way to kind of get your mind around it and not just say, well, here's what I think. You can talk to somebody who treats with, maybe 1,000 patients that have an issue like this. So, we're right now doing, more than one call a day for customers to help them answer questions like that in the really complicated space of drug development. And, the thing that's great about the pharmaceutical industry is just how much money can be made trading it, because one press release can easily move a name, 40, 50, 100% in either direction, up or down. So if you can get a good thesis around what's going to happen, why it's going to happen, and become a little bit disciplined in your trading, you can make a lot of money quickly in the space.
Just one quick question for you. Regulatory concerns or what's going on in the White House here. It's really something you really can't account for. Who knows what's going to happen with the policies regarding that? I was just wondering if you had any inkling what President Trump is digging up for healthcare and or the biotech sector.
Yeah, so I think going into it, my expectation had really been that he would do something on drug pricing. It's not that controversial. It's a deal type concept, and the concept that, hey, I'm going to negotiate and get us a better price. I think what we've seen is, I don't want to say it's necessarily a lack of effectiveness from the administration, because they have gotten some things done, but a little bit of a shift away from healthcare. So we had that first 6 months, let's say, of the presidency, maybe 8 months of the presidency, where that seemed to be what they were focused on, and did not get much done. And I kind of thought that coming out of the healthcare bill, or at some point, they were going to do a smaller thing to kind of, hey, we're going to take on drug companies. We're going to do, maybe fix the individual mandate, a couple other things. All they've really been able to do is remove that mandate as part of the overall tax package. So I think that we've actually seen, very little movement on the administration side to do much on drug pricing or any of these things. So, I wouldn't be surprised if at some point in the next 2 or 3 years they do something on the margins, because it is the kind of thing that I think aligns with what these guys would like to be able to say to their constituents. But we just really haven't seen anything concrete, and we've actually seen them be pretty supportive of industry. And so I would be of the mindset that that'll continue more likely than some sort of major overhaul or Medicare being able to negotiate drug prices or something kind of actually meaningful like that.
We've been on the line with
a lot of talk, but not too much.
Yeah, definitely a hard thing to think about and try to figure out where everything stands. But we'll keep an eye on that, and so will you, I'm sure. Joel McCann, he is the CEO of Slingshot Insights. SlingshotInsights.com is the name of that site. Thanks a lot, Joe.
All right, great, guys. Good to talk to you again.
All right, have a good one.
Have a good weekend. Yep, bye-bye.
All right, 8:51 now. Tell us where we're at, Joel, in the market. SPOOs.
We're rallying. This is
big time.
Yep. And Dennis, I just Skyped you. I don't know if you noticed here. And when you talk about these kind of environments and the markets are tricky, and there's a lot of stuff flashing on your screen. Sometimes simple works. And I was just looking, S&Ps came down just a little bit ago, I believe at the top of the show, and the spiders came down as well. The low of the spiders yesterday was 57.59, and we closed right near that level. Well, lo and behold here, the spiders, when you just had that dip, let me see what I have to change my time frame on my chart. Just had a dip. You took out the SPOO pre-market low by a little bit. And where did the spiders go to? 57.63. And the low from yesterday, 57.59 with a 57.63 close.
On that fallback just now.
I don't want to say I'm bullish.
Bounced off there.
I don't want to say I'm getting super bullish here, but
we held that. First test, we held that low.
Yeah. Yep. And if we can come back a little bit, I don't know. Now I'll be looking mid-range on the day. Mid-range on the day comes in for the SPOOs at what'd you say?
I want to know where the mid-range is, because it's got to be impressive.
98 basis the SPOOs, it's 98.75. So call it 2,600. So there's your battle. There's your battle off the open. You hold 2,600. Could definitely see us going up to that pre-market high of 26.17. Your daily pivots right there. And if you want to get super uber bullish like Dennis and Spencer, let's see here, 80.50 plus 63, which is your 9-day average trading range.
Numbers.
That's a big number. I don't think we're going to see my target, if the market stays within its daily pattern, is 26.43.50. Now that's a target.
Where are we right now? Because I'm looking at SPY.
06.
Yeah, so
it's
going to be wild. All we can tell you, this is just exploding here in the last 20 minutes. Since 8:30, since it looked like we were trying to go and test that low, we tested, we passed. Now there's buyers coming in, call them buy the dip, call whatever, they're coming in. The only concern I have is this feels a little bit like a repeat of yesterday, because remember, same thing happened yesterday. We found buyers in the pre-market. There was buyers at the open. They were buying stocks hand over fist. And then by about 10 o'clock, they started getting exhausted, and then we started to leak. And then we started to leak more and more, and finally giving back the loss or the gains for the day. And then not only that, after 11 o'clock, we started getting in the red. And then we just kept going down all day until we were just capitulating at the end of the day. I mean, the last 500 or last 50 handles in the S&P were really in the last half an hour. And that's incredible to drop 50 handles in the last 30 minutes. That's the capitulation at the end of the day. And I had a couple of, before we get to Qualcomm there, and we were coming back to it, had a couple of people tweet at me, and they were saying, around 2 o'clock, what do you think? Is this, going to get better or worse here? And I was like, Usually these days tend to get worse. There's a number of reasons for that too. You have daily rebalancing, don't remember, of a lot of these triple levered ETFs, and they got to sell. When they're down significantly, they're going to have to sell to close because they have to rebalance on a daily basis. And that can have an impact when you're down significantly. So that's why a lot of times you see follow through there. So, here's another example of how triple levered ETFs can actually impact the overall market as well. Because when you've got, that much downward pressure, they've got too much exposure, they've got to sell. And, I know they do this through swaps and different things, but they're all hedges. Everybody, whenever you do a swap, everybody else is hedging on the other side. So eventually it comes back and filters its way into the stocks. So when they're down significantly, when we're down 400 or 500 points at 230, say, man, this probably gets worse. And it feels like 9 out of 10 times it does.
And that's exactly
what
that's what Michael Szymanski said on Tuesday. He was on the show. Is the daily.
Who said that?
Michael on our show.
Yeah.
On the daily rebalancing. That's what makes things funky.
Well, it does. It does impact it, and when you have significant moves, because they have to sell. I mean, and if you don't understand, it's when you have a triple levered that's long or a triple levered short, they've got to keep that exposure. So as the market moves down, I actually did the math on this. I have the slide, I could show it sometime, but I was lecturing to our traders at Bright Trading. I wrote it out all at the math to it, and just showing that, when you have this move down, they are all of a sudden, have, the exposure. They don't have the exposure that they need. So they've got to rebalance. So they have to sell more to get to the exposure that they need, especially the short ETFs, because they need more exposure, or just, doing it out there. So basically, the bottom line is when the market's down significantly, they have to sell more. When the market's up significantly, they have to buy more to increase that exposure. And that's why you see these moves get exaggerated at the end of the day. So triple levered ETFs have a lot to do with that. And that's something our regulators should look at, because I think, it does increase volatility. To a certain extent, for sure.
Also, Spinner's putting in here that the DAX was hammered into the close yesterday. Also around that European close.
DAX closed at 230.
Yeah,
right?
That's another time. Yeah, to keep an eye on it. Also, the margin departments. They're probably reopening the margin departments in some of these brokerage firms because they were shuttered for so long. So you have those kind of things going on. I just think Friday here, I mean, we got a nice rally going. We're going to see some, some two-way action. But I think, portfolio managers here are, really going to have to take a good hard look, of what they have. And I just see some position squaring for the week. I don't really anticipate. I mean, now we're 30 points off the low. So I think the low of the day's in. I mean, and if it doesn't and we crack it, then this market's in big trouble. But we're getting a nice rebound here, double bottom basis bottom. Yeah, very nice rally. That's what that's the way I'm leaning. For Dr. J, real quick before we get Dennis's final thoughts here. Crude, which I'm just kind of kicking myself on here. I got caught in this breakout here. I was thinking I was at the top of the range and crude was going to give in, and shorted it in this area. I got blown out of the water when what did it go to 66 and change. Now it's back down. Let's see. We got a low at 60.05. Your current low is 60.15. Another low back in January, 60.23. So 60 is a big psychological level. What I would love now would be, to find some kind of bottom here, whether it's 59 or 60, and then have a rally up. That high of that move was 66.46. So get back 3.25, get back to 63.5 or so and redeploy some shorts. But 60 is the big number in crude oil over the next few days. Dennis?
John Dodson's been patient here with Qualcomm here. Sorry, John, we made your way to half because you threw out the question right as we were going to our guests, and then we went on a tangent here. So yes, I'm still sticking with my Qualcomm position. I bought it around 64, so I'm down about $1 in my portfolio. It's a long-term investment portfolio. It's not a trade. The wild card, okay, so yes, Broadcom rejects, the board. We knew they were going to reject it. The board's going to reject it for sure. They're saying the company is worth more. So, but this is also going to go to shareholders eventually here too. And Broadcom is, trying the best. They were talking about, ridiculous amount of synergies between the companies here, if they could actually get this deal to happen. I still think there's, the outside chance that this deal happens. But even if it doesn't happen, even if this deal, doesn't materialize, at a certain price, Qualcomm is just not that expensive anymore. It's got a 3.62%. So even as a standalone company here, I don't mind it. And then I have the wild card that eventually Broadcom might increase the price again because it seems like they really want it. They've already increased the price twice. And, maybe shareholders approve this thing in March. It's going to go to shareholder vote in March, early March. And, maybe they get a little bit hostile even with them and start going to the shareholders and try to, so. And either way, Broadcom really wants them. They want them for a reason. And I think there's value here too. So I'm sticking with my Qualcomm.
Okay, and what else do we have here in the S&P? Well, just going back, deja vu all over again. What was that one deal that they kept on rejecting, and then at the last second, the shareholders approved it? It was about a year and a half ago. I can't think of what it was.
I have the goldfish memory. That's why we rely on you here, or our trusty Benzinga Pro. But I don't know if that's going to be a hard one for Spencer to dig up.
You didn't even say what the company was. You just said.
That's all I know. It's a little bit hard for
I'm sorry. It was in the text. Anthony was talking about it a lot. Anthony Laverde. Maybe I'll ping him and ask him what it was. But okay. All right, Spencer, I'll let you wrap things up.
All right. If you want to catch any part of today's show or any of our shows this week, this month, this year, whatever, again, you can do so. Our podcast is on iTunes, SoundCloud, and Stitcher, or just rewatch the show. Go to youtube.com/BenzingaTV. Thanks to those of you who joined us today in our chat on YouTube and at premarket.benzinga.com for our other chat there. Thanks to our guest today, Joel McCann. Hope you all have a good rest of your day and a good weekend, and I hope you're not all snowed in like we are in Michigan here. It's already bad out there. It's gonna get worse. So hope you all aren't snowed in, and hope you guys have a good day out there and a good weekend. And I hope you join us again on Monday. In the meantime, have a good one.